Ladies and gentlemen, good day and welcome to the UFO Moviez India Ltd Q2 and H1 FY25 earnings conference call hosted by UFO Securities Ltd. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touch-tone phone. Please note that this conference is being recorded. I would now like to hand over the conference over to Tushar from UFO Securities Ltd. Thank you and over to you, Tushar.
Thank you. Good day, ladies and gentlemen. On behalf of UFO Securities Ltd, I welcome you all to UFO Moviez India Ltd Q2 and H1 FY25 earnings conference call. The company is represented by Mr. Rajesh Mishra, Executive Director and Group CEO, along with Mr. Ashish Malushte, Chief Financial Officer of the company. I would now like to hand over the call to Mr. Mishra for opening remarks, post which we can start question and answer session. Thank you and over to you, sir.
Thank you, Tushar. Greetings everyone and thank you all for joining our Q2 and H1 FY25 earnings call. The second quarter of this financial year began with the success of Kalki 2898 AD, released on 27 June 2024, which performed well across both Hindi and Southern markets. Alongside Kalki, the quarter was marked by the record-breaking performance of Stree 2 amidst a mix of varied content. So the first 2 months of the quarter saw average performances from titles such as Kill, Indian 2, Bad News, Ryan, Khel Khel Mein and Veda. Meanwhile, a few titles including Sarfira, Ulaj, Auron Mein Kahan Dam Tha and Double I Smart fell short of expectations. In September, despite a lack of successful Hindi movies, the month proved to be the strongest of the quarter, driven by southern releases such as The Goat and Devara Part 1. In total, 470 movies were released, including versions and languages during the quarter, compared to 484 in Q2 FY24 and 476 in Q1 FY25. The combination of fewer tentpole releases and the underperformance of several key films in the quarter, along with the lack of successful Hindi films in September, resulted in a muted advertisement revenue for the quarter, contributing a decline of 17% year-on-year and improvement of 12% on Q&Q basis. However, a 7% increase in theatrical revenue and a 79% year-on-year growth in sale of product supported overall performance, resulting in a 11% year-on-year increase in total revenue this year. On the screen network front, the advertisement screen network grew to 3735 screens, marking a 13% year-on-year increase. This includes 2122 multiplex screens and 1613 single screens, with the addition of 432 advertising screens over the past year. However, there was a 1% decline quarter-over-quarter. Turning to the key figures for the quarter and half-year ended September 2024, the consolidated revenue of Q2 FY25 stood at rupees 968 million as against rupees 871 million in Q2 FY24, primarily driven by sale of product. EBITDA was lower at rupees 102 million compared to rupees 177 million year-on-year, though it improved from rupees 66 million in Q1 FY25. The company has reported a net loss of rupees 9 million in Q2 FY25 compared to a net profit of 33 million in Q2 FY24 and improved from the net loss of rupees 42 million in Q1 FY25. Regarding half-year performance, consolidated revenues amounted to rupees 1913 million as compared to rupees 1725 million in H1 FY24. EBITDA of H1 FY25 was at rupees 168 million compared to rupees 340 million in H1 FY24, mainly due to lower advertisement revenues. On the PAT front, the company reported a net loss of rupees 50 million in H1 FY25 against a profit of rupees 58 million in H1 FY24. The consolidated cash at the end of the quarter was at rupees 998 million and the net cash was rupees 409 million after considering outstanding debt. Looking ahead, although the quarter
Hello, sir. Hello. Dear participants, kindly stay connected while we connect the management team back on the call. Dear participants, kindly stay connected while we connect the management team back on the call. I welcome back the management team. Please go ahead, sir.
Yeah. Our apologies, we are facing some slight technical issue here. So I'll go back a paragraph and start reading again. I think I lost you from that point. So I was talking about regarding our half-year performance. The consolidated revenues amounted to rupees 1913 million as compared to rupees 1725 million in H1 FY24. EBITDA of H1 FY25 was at rupees 168 million compared to rupees 340 million in H1 FY24, mainly due to lower advertisement revenues. On the PAT front, the company has reported a net loss of rupees 50 million in H1 FY25 against a profit of rupees 58 million in H1 FY24. The consolidated cash at the end of the quarter was at rupees 998 million and the net cash was rupees 409 million after considering outstanding debt. Looking ahead, though the quarter began on a subdued note with release of some films like Vittai and Jigra and Vicky Vidya Ka Wo Wala Video, the upcoming release pipeline looks good with releases such as Bhool Bhulaiya 3, Singham Again, Tangua, Pushpa 2 and Baby John in December. We are optimistic about building up momentum in the upcoming quarters. I would now like to take this opportunity to thank all our stakeholders for their continued trust in the company. With that, I open the floor to take your questions. My colleague and CFO, Mr. Ashish Maliste, and I will be happy to take your questions. Thank you.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. First question comes from Ankit Kanodia from Smart Sync Services. Please go ahead.
Yeah. Thank you for taking my question. So my first question is related to the press release we shared yesterday. In the notes, point number 4, we have alluded to an NCLT order, but I find it difficult to believe as in the order came in January and we are reinstating our accounts now. Can you give us some more color as to what happened and why we are doing this reinstatement today rather than earlier?
Hold on, you are referring to press release, right?
Yes.
That's what you mentioned?
Yeah, press release. Yesterday's press release, as in the BSE notification, BSE announcement of results, where after the financial statements you have shared notes to accounts, and I'm referring to notes number point 4.
Okay. So you're talking about Regulation 33, Note 4.
Yes.
Correct?
Yeah. Well, basically, amalgamation.
Yeah.
My question is, we have reinstated our last year's quarterly revenues, and there we have mentioned that please check note number 4. And in note number 4, we have mentioned that there was an NCLT order regarding approving this amalgamation scheme in the month of January. So can you throw more light into what was this order, what was the amalgamation scheme, and why we are reinstating our last year's account today.
Okay, so I got your question and thanks for bringing it up. So the thing is, the effect has been given immediately after the order was received, which was somewhere in Q4 of last year. Now the problem is, in this particular quarter, we are disclosing a comparison between current quarter, which is Q2 for current year, with Q2 for last year. Correct? Now, when there was a Q2, when we were in Q2 last year, this order had not come in. So therefore, the last year's Q2 reported numbers didn't have this order effect. Okay. Now that we are presenting to your comparison, we had two options. Either we keep Q2 last year's reported number the way it was, without giving adjustment of the order, or without giving effect to the order, and comparing it with this Q2, but then this wouldn't have been apple to apple.
Got it.
So therefore, and this is a very, very normal practice. This is nothing new. Just that this kind of restatement helps the reader of the financial statements to have an apple to apple comparison. Okay?
Got it, sir. Sir, can you just throw some more light as to the order and the amalgamation scheme of the four wholly owned subsidiaries?
Okay. Thank you again. So this was a simple order, simple merger. We had certain 100% subsidiaries of ours, and therefore, and many of those subsidiaries were formed for a specific objective, primarily in relation to DCI business. Okay, in 2011-12. One of that was a company that we had also acquired, and finally it became 100% subsidiary. So this scheme is basically a very simple scheme in which we simplified our corporate structure, and all our 100%, those 100% subsidiaries, which were formed with a particular objective, and that objective was met, those companies were only merged into the holding company. Now, when you look at a consolidated number, there is no change, because when they were separate, that time also the numbers were part of Concall 100%, and now that they are part of, they are merged into UFO, still the numbers would remain the same. So the scheme was only and only to get those 100% subsidiaries into UFO, so that you have some savings in operational efficiencies and operational costs.
Got it. Thank you so much, sir. That was very helpful. My second question is related to the dip in the advertisement revenue. Of course, we understand that whenever the industry doesn't do well in terms of blockbuster movies or the number of movies, then our ad revenues also go down. But when I look at the number of minutes sold per show per ad screen, I think it is 2.68 in H1 FY25, and I don't think in the last many years, I'm seeing FY15, 16, 17, 18, 19, 20, up until FY24, we have never come down to this kind of level. So what do you think is the reason for such a low number on this metric? Because I think this metric is a very good indicator as to how our ad revenues will do, right?
Yeah, so it's a good observation when we are comparing it with the past performance in terms of volume of minutes sold. And yes, in this quarter you see a reduction, and I'm not trying to justify it, but you would have slightly similar level of volume even in the past. But more important point which I want to drive is, yes, you touched base on the issue that we all faced, which was content was erratic in Q1. And why I'm saying Q1 is advertisement business. My request to you all is just appreciate this point, that advertisement business builds on the previous performance of the cinema as a medium. So if in Q1 there is a bad performance of content as a whole pursued by the advertiser, their allocation in Q2 will not be good. So now you have to wait for Q2, wait for something like Stree to come, and then the allocation is there, and next quarter's allocation also becomes positive. So over here the challenge was because of the content performance of Q1, which continued in Q2. But I want to bring to your notice one point, which is about the pricing. Now we don't disclose the pricing for strategic reasons, but you can derive the pricing related point. If you actually compare the fall in volume and the fall in actual sales, okay, turnover, the actual drop in the sales is far too lower in terms of percentage as compared to fall in the volume of the minutes sold. So what it tells us is that the ad sales team, in spite of having these challenges, were able to generate this kind of volume, which is not really very low, but this kind of a volume that they were able to generate at higher price points than what they were selling in the first quarter or in the same quarter last year. And this was a very strategic move that we wanted to push after we exited COVID. And for us, exiting COVID is still a process, and it's not only for UFO, for cinema industry as a whole. And this is one major win for us. I would say that the teams were able to demonstrate that higher pricing they were able to push in the market and still able to get this kind of a volume. So this is one point which I want to tell. The corollary of, the other way to look at it is, if we had given free hand to the sales team not to bother about pricing, then probably the volume could have been higher. I don't want to speculate how high it would have been, but I'm sure you would appreciate that pushing pricing up is always a challenge in any industry, and here you are actually seeing it happen.
Right. So my next question is related to this advertisement revenue only. So when in a quarter our advertisement revenue year on year is going down swiftly, I just fail to understand why our advertisement share with the exhibitors or distributors, it is going up by 33%. Because when I look at your standalone and consolidated results, I see a 33% jump in the advertisement revenue share in the expense column. Why that is happening?
Yeah, so again, two reasons here. One is something which probably you would have been able to track, that there were some very critical acquisitions that we did of advertisement side of some very large networks down south. And that was in the third quarter, Jan this calendar year. And over there we had larger commitments on, the minimum guarantee. And those commitments were relatively higher as compared to what my sharing is. And that was bound to push my overall percentage up. Just to give you perspective, that was almost adding 400 screens to my network of 3,600 screens. So little over 12% was the increase in the number that I was doing to my network at a higher, the minimum guarantee value. Now, the simple answer is that, but what I want to, since this point has come up for discussion, I want to quickly take you to some data points, and that is relevant for, probably relevant from the investor's point of view. In 2020 or even before that, UFO was generally perceived to be a single screen player. And there was a very common discussion whenever we used to meet the investor. The perception was, okay, you serve single screens. Single screens are going to shut down over a period of time, and therefore probably you are operating in a sunset industry. And we made efforts to explain them that that's not true. We are trying to service the whole plethora of the players in this industry. So ultimately, the thing that we were trying to do was to change the composition of single screen multiplex in my overall network. And when I say I want to change this composition, that means that I have to acquire multiplexes probably at a higher minimum guaranteed value. Minimum guarantee is the sharing that we commit to the theatres. So ultimately in 4 years, even considering the COVID period, what we have achieved is, in 2020, my screen count was 3792 and my multiplex count was 1565. And today, my screen count is slightly lower to 3735. So almost there, 50 screens down. But from 1500 multiplexes, the multiplex count now has gone up to 2122. Now, this is a very, very significant move. So 2122, probably we are the largest in terms of the advertisement network in the country, having multiplex as a count. And these multiplexes have also helped us to make sure that the quality improves and therefore the pricing improves. and overall the health of this vertical would start looking better from now on when the content supports. So the reason why the share has gone up is because the quality of network was to be improved. I've given you a specific example of Jan where there was a 10% commitment that we had done volume wise. But the deeper strategy behind it is what I explained to you. Moving from single screen to multi-screen.
Yeah. So if I got it correct, so does that mean that the ad sharing which has as a ad sharing with exhibitors which has gone up slightly higher as in 76.43%, this should potentially go down to our average 30, 35, 40%, which it has to be, which it was in the past as well. That is what you would like to say?
So mathematically speaking, how much it will go down will depend on the denominator, and denominator in this case is the sales that we do per screen.
Okay.
So if you're doing say 4.5, 5 lakh, we will be around 60%, 60, maybe 55, 60%. The moment we start inching closer to 8, 9 lakhs, this will come down closer to 40 to 45%. So this is the beauty. In fact, this you can actually see in our numbers. Q1 the sharing will be higher. My Q1 sharing was almost 85%, and in Q2 it has come down to 69%. This is how actually it plays.
Okay. One last question, if I may. So at a time when the industry is probably going through a lull period, what makes us bump up our expenses on digital cinema equipment and lamps? As in, I see that almost doubling if I compare H1 to H1 FY25 to H1 FY24. It would be that from 20 crore it has gone up to 37 crore, almost double.
Can you help me with the line item, because there is some
purchase of digital cinema equipment and lamp. It's in the operating direct cost. Second line.
In fact, I'm very, very thankful to you raise this point. This actually explains that the industry is not in that kind of a bad situation, and I'll tell you why. We have two lines of business primarily. Of course, those are closely linked with each other. The one which we have been discussing is about my service offering, where I have my servicing the theaters and then I advertisement right and I monetize it. But since we are in this business, whenever there is a theater which wants to buy equipment on its own, okay, we become one-stop shop for them, and sale of digital cinema equipment, which is a trading business for us, is another line of business for us. And it's a steady business in India and in international, predominantly in international. When I say international, in Middle East, Dubai. So over here, we play the role of a trader. We buy the equipment and we sell the equipment and we have 20% margin. Okay? So all that you see here is only because more number of people decided to buy digital cinema equipment in India and in Middle East. And therefore my sales was high and correspondingly my sharing was high. I mean not sharing, my cost of purchases was high. I think we earned 3 crores more on year-on-year basis from this trading line of business, if I'm correct. Yeah, 3 crores is what we have earned. So it is not to be confused with my core business expense, but it can surely be an indication of whether the industry is still investing into capex for this business or not. Apart from us, these are outsiders.
Got it. And sir, if I understood it correctly, so basically from a macro perspective.
Sorry, go ahead.
So from a macro perspective, there are two main levers for our company. One is the quality and the quantity of movies getting released, and the number two is the amount of people coming to the theater to watch. Like in number one, we don't have any control, because what kind of movies will come and how many movies will come, that we can't have any control. We are not in the business of making movies, right? But on the second point, in terms of making more people coming to cinema, I think we have started on two initiatives. One is the Caravan and the other is Nova Cinemas. So how do you see that in the near term and in the medium term? These help you to get more people on the theaters, and maybe that will help us in our revenue streams. That's my last question.
Yeah. Okay. So as far as Caravan Cinema is concerned, that is a moving talkers business that we have been engaged in, and we see good traction in this business from state governments and even during elections and political parties and all those things. It is a very good business to be in because it is reaching out to areas where there are no cinemas, let us say. Right now, going up into the rural areas, or they are government is using these vans and all, like they had used for Viksit Bharat campaign, Aadhaar card updation and all those activities. So this business does not have a steady trend, but it comes in bursts and in particular times like a election happening or a like for example in monsoons, the business will go down. It will there will be very little traction because these are open air shows that are conducted. But December area, the winters fares well on this business, and we are hoping to see traction in the coming quarters in this activity. See, regarding getting more footfall in the cinema, we can reach out with initiatives like Nova and Caravan for the interior cinemas. And we will be looking at engaging people to come and encourage them more to come to the cinemas. Point to be appreciated here is that these are areas where there was no cinema at all. So the cinema viewing habit has to be rekindled over here. But for that again, we will be dependent largely to a large extent on good quality of films coming in. So as I had mentioned, we are seeing a good lineup in Q3 and Q4 going forward. So this will definitely push that. As far as Nova is concerned, Nova is still a nascent business for us. One property opened up in Uttar Pradesh, and second property is we are just opening up with Diwali with the release of Singham and Bhul Bhulaiya. So it's still early days, but this is a business that will have a larger potential to reaching out to the hinterland over there where there are no cinemas, as I said, and this should be a very good initiative from our perspective and also from the perspective of the cinema viewing habits of people.
Thank you so much, sir, for all the detailed answers, and all the best. I will come back in the Q5 anymore. Thank you.
All right. Thank you, sir.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. Next question comes from Aditya Karnat, an individual investor. Please go ahead.
Hey, thanks so much. So I just have a few questions. One, I think good that you highlighted pricing. I think the market is at least reacting positively to that. I don't think the market is aware, so that's good. I hope you continue to encourage pricing
Hello?
trend.
Hello?
Yeah, can you hear me?
Hello.
Can you speak a little louder, please?
Yeah, we missed your pointer. Sorry.
Yeah, can you hear me? No.
Yeah, little better.
No, I was just saying a couple of questions, but I think it's good that you highlighted pricing because I think the market also pretty much reacting to your words. So I think it's new information. With every time you have pricing strength, I encourage you to play it up. But obviously, like pricing is not enough, right? You're pricing into volume with revenue, so your volume still was quite on the lower end. And if you compare, like PVR starts their quarter saying Bollywood has a big bounce back, 40% increase in box office collection, but it doesn't show up on your side of it. You had 3-2 also in August, right? In August, 3-2. So that was a breakout hit. So you had pricing, and you should have had a good volume, but it didn't happen. So can you just talk about like what the challenges were in this quarter with volume? Because your ad revenues are down relatively, and your inventory sales or your whatever, your per screen revenue or minutes sold, they're all kind of down. But your pricing is up. So it's clearly a volume issue. So what was the issue if we had like good box office and Q2. Just if you can talk about pricing, then I have a few other questions on free cash.
Yeah, sure. So let's address this point. In fact, I tried